In this video, I'll provide a complete review of VGS, a popular ETF listed on the ASX. Let's get straight into it. VGS, which is the Vanguard MSCI Index International Shares ETF, is one of the most popular global ETFs available on the ASX. It's designed to give investors broad exposure to the world's biggest developed markets, excluding Australia. By investing in VGS, you're essentially buying a small slice of around 1,300 large and mid-sized companies from countries like the United States, Japan, the UK, Canada, France, Germany, and more. Some of the top holdings include global giants like Apple, Microsoft, Amazon, Nvidia, and Google. This ETF aims to track the performance of the MSCI World ex-Australia Index, which reflects the returns of international developed share markets. It was launched on the 18th of November 2014 and is domiciled in Australia. This means it's managed under Australian laws and regulations. This is a big advantage for Australian investors as it makes tax reporting much easier and more simple. As of July 2025, VGS manages over 11.7 billion in assets under management, making it one of the largest international equity ETFs on the ASX. A high AUM indicates that the ETF is trusted by investors and provides more liquidity for buying and selling. It's issued and managed by Vanguard Investments Australia, a trusted name in the Australian finance space, and hence why the AUM is quite high compared to other similar ETFs. VGS charges a management fee of 0.18% per year. This means for every $1,000 you invest, you pay $1.80 in fees. And the good news is, these fees are automatically deducted from the ETF's share price, so you won't need to pay them out of pocket. It is also important to note that VGS does not include any Australian companies and is not currency hedged. This means the performance of the ETF can be impacted by changes in the value of the Australian dollar compared to other currencies. Please note there is a currency hedged version of VGS called VGAD, which you can check out on their website if currency hedging is important to you. Additionally, the fund is heavily weighted towards US stocks, which make up over 70% of the portfolio. While this reflects the global dominance of US companies, it does mean the fund is somewhat concentrated in one country. VGS currently holds just under 1,300 companies. The current top 10 holdings are Nvidia, Microsoft, Apple, Amazon, Meta Platforms, formerly known as Facebook, Broadcom, Alphabet Class A, which is Google, Tesla, Alphabet Class C, which is basically identical to Alphabet Class A, except Class C does not have voting rights. Then you have JP Morgan Chase to close out the top 10. As you can see, the top 10 are dominated by US companies, and in particular, US tech companies. These top 10 companies already make up 25% of the entire ETF. This kind of makes sense if you look at the market allocation, with the United States making up a whopping 73.1% of the entire market share of the ETF. The next largest country is Japan at 5.5%, the UK at 3.7%, and Canada at 3.3%. Then you have the remaining developed countries making up the smaller portion of the ETF. If you look at the sector allocation, there is a strong tilt towards technology, which makes up around 27%, followed by financials at around 16%, and industrials at around 11%. Other sectors like consumer discretionary, healthcare, and communication services also contribute a meaningful percentage. So what does this all mean for VGS investors? Well, tech-heavy exposure means higher growth potential, but also higher volatility, such as sensitivity to the tech sector's ups and downs. Sector diversification helps spread risk. Financials, healthcare, and consumer sectors provide stability, balancing out tech exposure. For portfolio impact, if you're overweight Australia in your portfolio, adding VGS gives you strong access to global innovation, but you might want to balance it with some domestic exposure for overall diversification. If you're interested to know the complete list of all VGS holdings, you can visit their website and download this CSV file. This spreadsheet shows all the companies in VGS organized by market cap and percentage of the ETF, along with their sector classification. I think this is quite useful to know, especially if you're interested in VGS, so I would highly encourage you to check it out. Let's now check out the performance of VGS over recent years. You can find this information under the Performance tab on their website. The performance data is available in both chart and table format, but I personally prefer using the table view. As you can see, the performance is broken down into several time periods. These include last month, year to date, 1 year, 3 years, 5 years, 10 years, and since inception from May 2014. As of the 31st of July 2025, VGS has delivered an average annual return of 16.38% over the last 5 years. This figure includes both share price appreciation and reinvested distributions. To put this in perspective, a $10,000 investment in VGS made 5 years ago would now be worth over $20,000. So basically a double up in 5 years. These returns are calculated after management fees and assume all dividends are reinvested. To better explain, there are two main ways to make money with stocks. First, through share price appreciation. For example, if you own 20 VGS shares at $145 each, which is $2,900 in total, and the price rises to $160 a year later, your shares are now worth $3,200, giving you a $300 profit. And second, you make money through dividends or distributions. When companies within the ETF pay dividends, the ETF must distribute these to the shareholders. While companies are not legally required to pay dividends, ETFs must pass along any dividends they receive to their shareholders. So the performance return includes both the share price appreciation and reinvested dividends. One important thing that I do want to note is that these figures represent average annual returns. For example, while VGS has averaged over 13% annual returns since the inception date of May 2014, this does not mean a steady 13% growth each year. As shown in the chart, some years saw gains, others had losses, and some showed minimal changes. It wasn't a straight line growth. Over the long term though, the fund has grown at an average rate of 13% annually. This is very important to understand, as I often see new investors looking at an ETF's historical performance and expecting identical returns year after year, which is not realistic. Also, please keep in mind that past performances does not guarantee future results. I know that previous example looked pretty cool on paper, but a $10,000 investment today may perform differently over the next 5 years. So use historical performance only as a guide. VGS usually pays out quarterly distributions. These are made up of dividends collected from the companies it holds. The dividend yield typically sits around 1.5 to 3% per year. It's currently sitting at around 1.7% based on the last 12 months. If you prefer to reinvest that income, there's a dividend reinvestment plan, or DRP for short, you can set up, which allows you to automatically buy units of VGS instead of taking the cash. You can check out the distribution history on their website. Just click on prices and distribution and scroll down to distribution history. Now looking at the distribution history, VGS paid out their most recent distribution in July 2025. I'll quickly go through what these terms mean in the table. Distribution date is the date when the distribution amount is officially calculated. It's based on how much income, like dividends or interest, the fund earned during the period. CPU stands for cents per unit. In the last distribution payment, you would have received about $1.27 for each VGS shares you owned. So if you had 20 VGS shares, you would have received around $25 in the last quarterly payment. The ex-entitlement date, also known as the ex-dividend date, is when the stock starts trading without the dividend. After this date, new buyers won't receive the upcoming dividend. Record date is when the company checks its record to identify who owns shares. Payable date is when you'll actually receive your dividend payment, either in the bank or if you set up DRP, the money is automatically used to buy more units of the ETF. Reinvest price is the share price used when automatically reinvesting your dividends. This obviously only applies if you set up a DRP. If you want to learn how to set up a dividend reinvestment plan, I'll link a video down in the description. And as previously mentioned, the dividend yield is currently sitting at around 1.7%, although this can change in the near future since dividends can be unpredictable and no one knows what will happen in the future. And again, please keep in mind, companies are not legally required to pay dividends. They choose to pay them based on their profitability and other factors. Also, just a quick note on the ETF terminology, while dividends and distributions refer to the same type of payment, they're supposed to be used in different contexts. Companies pay dividends directly to their investors, while funds like this ETF pay distributions. Since VGS receives dividends from companies and passes these payments to investors, they're technically called distributions, although the terms are often used interchangeably. So if you hear these terms during the rest of this video or in the future, know that they basically mean the same thing, just used in different contexts. Let's now look at an alternative ETF to VGS. The one ETF that many Aussie investors compare VGS with is BGBL, the Beta Shares Global Shares ETF. Both ETFs offer broad international developed market equity exposure, excluding Australian companies. Let's compare the key features on this table. Firstly, VGS is provided by Vanguard, an American investment group that is the second largest investment firm globally after BlackRock. BGBL is provided by BetaShares, a leading Australian investment firm, while not as large as Vanguard, still has a strong reputation in Australia. BGBL is quite new, having only launched in May 2023, so it's only been around for just over 2 years. Their assets under management total is approximately $2.4 billion, which is still quite big, but by comparison, it's only about 20% of VGS's size. BGBL's management fee is notably lower than VGS at 0.08%. VGS paid distributions quarterly, while BGBL aims to pay at least once a year, but though based on their distribution history, they typically pay twice a year. They both offer dividend reinvestment plans since they're both domiciled in Australia. The one-year performance is similar at around 18%. VGS has a longer track record as evidenced by its 5-year average return of approximately 16%. BGBL is still relatively unproven and lacks sufficient data for a 5-year performance comparison. Both ETFs hold similar number of companies and are heavily weighted towards US stocks, with US exposure of around 72%, and their top 10 holdings are basically identical. So all in all, very similar ETFs. The key differences are BGBL has lower fees, is a newer fund, has semi-annual distributions, and smaller size. VGS has slightly higher fees, a longer track record, higher distribution frequency, and a larger AUM and liquidity. Please make sure you do your own research before deciding the best ETF for yourself. Let's now look at some of the main risk or criticism of VGS. The first criticism is the heavy US exposure. As we already know, despite being internationally diversified, more than 70% of the fund is invested in US companies. This concentration can amplify risks tied to US market or political fluctuations like tariffs or economic policy changes. 2. Focus on developed markets. VGS focuses on developed markets like the US, UK, and Canada, while excluding emerging economies like China, as well as smaller companies, which limits growth potential and diversification in high-growth regions. And 3. No Australian exposure. Although Australia only makes up 2% of the global stock market and is not essential for your portfolio, many Aussie investors prefer companies they understand and use daily, like CBA, Woolworths, or Coles. VGS includes major global brands like Apple, Toyota, and Nestle, which is excellent for diversification, but are potentially less familiar for new investors. This is why many Australian investors typically pair VGS with VAS for local market exposure. Overall, VGS is a popular option for Australian investors who want long-term global diversification, exposure to high-performing international companies, and a simple low-cost investment vehicle. Many Aussie investors choose to pair VGS with a domestic ETF like VAS or A200 to build a complete portfolio that covers both Australian and global markets. Again, please do your own research when choosing your ETF. For more detailed information about this ETF, you can visit their website, which contains everything I've covered in this video and more. I strongly recommend doing additional research there. Their fact sheet is also available for download, offering a concise overview of all the key information in just a few pages. Most ETFs in Australia will have a fact sheet on their website. When I'm researching a new ETF, I typically start with the fact sheet to get a high-level overview of the fund. If I'm interested in learning more, I'll then explore their website in greater detail. And quick disclaimer, this video is for educational purposes only and should not be considered financial advice. The ETFs mentioned in this video are not buy recommendations and are examples only. Remember that investing involves risk and past performances does not guarantee future results. Please always do your own research. And if you like financial advice, please go speak to a professional. By the way, if you're enjoying this video and made it this far, comment the word onion down below so I know who you are. And if you're new around here, what are you waiting for, mate? Hit that subscribe button and join this wonderful community of like-minded people. Also, please consider signing up for my free newsletter, Aussie Money Club, where once a week I'll send you some money tips, major news in the market, or any cool updates from me. And if you want to learn how to invest in ETFs this year, check out this video on screen where I'll show you a beginner's guide on how to buy your first ETF in Australia. And as always, thank you for watching, I appreciate you, and I'll see you in the next video.